Hello and welcome. In this video, we will learn about the bullish engulfing candlestick pattern. Alright? Now, this is a two candlestick pattern, meaning we will have to look at two candlesticks to decide if it is a bullish engulfing pattern or not. Okay? Now, these are the characteristics of a bullish engulfing pattern, and so let us learn about these. First is that it must occur at the bottom of a downtrend, meaning if you are looking at a candlestick chart of monthly time frame, then from past few months the price must have been coming down. If you are looking at a day time frame candlestick chart, then from past few days the price must have been coming down. Okay, so it doesn't really matter which time frame chart you are looking at, the price must have been coming down, and at the bottom of the downtrend this pattern must happen. Okay, and only then we will consider it to be a bullish engulfing pattern, because this pattern can happen anywhere, meaning it can happen in a sideways movement of price. It can happen in an uptrend too, meaning it can happen in the middle of an uptrend or at the top of an uptrend too. So if that happens, then we will not be considering it as bullish engulfing pattern. Okay, so we consider it to be bullish engulfing pattern only if it appears at the bottom of a downtrend. Next is that green candle must engulf red candle, meaning the green candle must eat the red candle. It must engulf the red candle, meaning the opening price of the red candle should be lesser than the closing price of the green candle, and the closing price of the red candle must be more than the opening price of the red candle, or in other words, this level must be lesser than this level, and this level must be higher than that of this level. Okay, this entire body should come in between this entire body. Okay, or this entire body should come inside this entire body. Alright, next, the red candle must be as small as possible. This red candle must be as small as possible. If it is smaller than this, then it is very good. Why? You will see later. Okay, so it is good if the red candle is small. If it is big like this, then this should be much more bigger than this. That's all. Okay, we want it to be as small as possible, but generally we won't get like that. So it is okay if this is big too. This has to be bigger than this. That's all. Okay. Next is wicks do not matter, meaning wicks can come out of the range of the green candle. So we are not really worried about the wicks in this pattern. Alright? Yes. Now, see, this is an ideal bullish engulfing pattern wherein there are no wicks in the red and also in the green candle. See, there are no wicks here, correct? There are no wicks here too. So this is an ideal bullish engulfing pattern. But what happens is, in the market, we do not generally find this type of bullish engulfing pattern. Okay, and so we will have to adjust with the variations. So these are bullish engulfing variations. So let us look at these. So here if you see the entire red body comes inside the entire green body, or the green body is completely engulfing the red body. Correct? This level is lower than this level. This level is higher than this level. So the entire red body has been covered by the green body. But the wick of the red body is outside that of the range of the wick of green candle. Okay, the wick of the red candle is outside of the range of that of green candle. Correct? So even then we consider this to be a bullish engulfing pattern. Alright, so here the wick is inside the body, this is fine, but here it is outside, and even then we consider it to be a bullish engulfing pattern. Alright, next if we look at this, the body is small and it is inside the range of the green candle, or the green body is completely covering the red body along with the wicks of the red candle. So this is a valid bullish engulfing pattern. If we look at this, here too the entire red candle body is engulfed by the entire green candle body along with the wick of the red candle body. So this is a bullish engulfing pattern too. Alright. This here is also a bullish engulfing pattern. The red candle body comes inside that of green candle body. But here the wick of the red candle is outside that of the wick of the green candle. Even then this is considered as bullish engulfing, because in all the patterns what matters is the body of the candles. Okay, the body of the green candle must cover the body of the red candle, which is happening in all four cases, and so all four are bullish engulfing patterns. Okay, now coming to this and this. This pattern is stronger than this pattern, because the red body here is smaller than the red body here. Okay, when we compare this and this pattern is stronger than this, because here the size of the red candle is almost similar, but then we have a long wick on the top, and we have already learnt about this pattern. Correct? We have already learnt about this pattern, and so this makes a stronger pattern than this. Alright? Yes. Now let us look at some of the patterns which are not considered to be bullish engulfing. Alright? So the first one, here we have a red body, here we have a green body. Here the level of the red candle is higher than that of the green candle. But then if we look here, the level of the red candle is once again higher than that of the green candle, and so this cannot be considered as a bullish engulfing pattern. If this was somewhere here, we could have considered this to be a bullish engulfing pattern. But unfortunately, it is at a lower level, and so we cannot consider this. What do we want? We want the green candle to cover up the red candle, or the body of the red candle must be inside the range of the body of the green candle. That is what we want, and that is not happening here, and so it is not a bullish engulfing pattern. Now here we have a green candle and a green candle. What we want is a red candle first and then a green candle. Even if the pattern comes after a downtrend, even if every other condition is satisfied, this is not considered to be a bullish engulfing pattern, because we do not have a red candle here. Only if we have a red candle and then a green candle, we consider it to be a bullish engulfing pattern. Okay? Now, it does not matter whether the price has gone up from here. It does not matter whether the price has gone up from here. It is that we do not consider this to be a bullish engulfing pattern. Alright? Next, here this level is higher than that of this level. So this is okay. But if we look here, this level is higher than that of this level, which is not what we want. Correct? We want this to be lower here. We want this at a higher level than that of green candle here, which is not happening here, and so this is not a bullish engulfing pattern. Alright. Now, there are traders who consider this to be a bullish engulfing variation, because their argument is that this price has opened up at a higher level. Correct? What does a bullish engulfing pattern do? It signifies, or it denotes, a change in trend from downtrend to uptrend. Right? Now, if we look at this, the price has opened up higher, meaning the price is moving up, and that is what a bullish engulfing says. Correct? And their argument is that since the price has opened up higher and also it has closed higher than that of this, this can be considered as a bullish engulfing pattern. Okay? So there are traders who treat this as bullish engulfing pattern, and you are free to do so too. Okay? You are free to consider this as a bullish, or you are free to consider this as not a bullish engulfing pattern. Alright? Next is this. Here, this level and this level are same. This level and this level are same. And since this green candle is not eating up the red candle, or the range of this green candle is equal to the range of the red candle, range meaning the range of the body, this is not considered as a bullish engulfing pattern. Alright? Yes. Now, let us look at few charts and see how this has worked out. Okay? First is this company, and it is a day chart. You can see there was a downtrend. Price was moving down from past few days, and we have a bullish engulfing pattern here. I told you that this is not a bullish engulfing pattern. This same pattern has come here. And I also mentioned that few traders consider this to be a bullish engulfing pattern. You are free to do whatever you want. Okay. Now let me consider this to be a bullish engulfing pattern. So I have a red candle, I have a green candle. This level is lower than this level, but here the price has moved up, and let us say I feel it is fine. Okay, I feel it is fine. Now I have to take an entry. The way we take an entry is by keeping a stop loss first and then fixing the target. Okay, if it is more than twice of the risk, you know about that, correct? Now the place, the location where we keep the stop loss is by looking at the low of both candles. So if I look at the low of green candle, it is here. If I look at the low of the red candle, it is here. Out of the lows of both candles, this is the least, or this is the lower one, correct? And so we have to consider this candle to place the stop loss. We can place here, but the problem here is the candle before that has come still below, correct? And the chances of price coming down till this level is more, and so we have to consider this candle to place our stop loss. And so below this must be our stop loss, and this would be our target. Okay, we have a small resistance here, but if we consider this to be a resistance, then we cannot enter a trade because the risk reward ratio will not be good. And so let us consider this to be our first target. Okay, we can enter as soon as the candle closes here, and we can wait for the price to reach the target. Okay, now let us talk about the support and resistances. Okay, now this is a bullish engulfing pattern. Now what you have to do while trading this is see if this pattern is happening at a support, meaning go back and see if you have a support. If you have a support, and if this pattern is appearing at the support, then this is a very good bullish engulfing pattern, meaning the chances of this pattern succeeding is high. Okay, if there is no support behind, then entering this trade would be a risky one. Okay, entering the trade would be a risky one. All right, yes. Next thing that we can notice here is this is a resistance, and it is formed at a round number 2000. Okay, round numbers act as supports and resistances. Okay, so 500, 1000, 1500, 2000, 2500, all these are round numbers, and they act as very good support and resistances. In this case, it is a resistance. So we have our first target at resistance. We have bullish engulfing at support, target at a round number resistance. Alright. So you can enter this trade. What some people do is they wait for a price confirmation, meaning they wait for the next candle to close above this price, above the closing of this green candle. Okay, and if you wait for a candle to close above this, then sometimes you might not get an entry itself, because the very next candle would be a red candle, and after that the price would start to move up. Okay, and also according to me, a price confirmation for this bullish engulfing candlestick pattern is not necessary. This itself is a price confirmation. We have seen if this is happening at a support, and we have made sure that this closing price is above the opening price of this, and this itself is a price confirmation. Okay, so you can enter here and write the journey, or you can wait for price confirmation. And as I said, it doesn't work all the time. If it works, if you wait for a price confirmation, if a candle closes here, then your risk would also be more, or your stop loss would also be more. Okay, so you have to watch out for that. Clear? Yes. Next, let us move to one more example. So Tata Communications, price has been moving down, price has been coming down, and we see a bullish engulfing pattern. Now here we have a small red body, and a green body completely covering the red body. Okay, so this is a perfect, I can say, perfect bullish engulfing pattern. And now I have to take a trade. So first I have to place a stop loss, and by looking at both candles low, this would be the lower one, this green candle's low, and I would be placing the stop loss below that. Okay, and here would be my first target, because this is where the price went up and started to move down. This would be my first target, and this would be my second target. Okay, let us not worry about second target. Okay, so this is target, and I can and the target has been hit here. Alright, now let us try to understand the psychology of bullish engulfing pattern. See, I told you that the red candle must be as small as possible. This is because it denotes an indecision in the market. The price was moving down, correct? Price was moving down, meaning the bears or the sellers were in control of the price. They were continuously bringing the price down, right? And suddenly, when a bullish engulfing appears with a small red candle, it says that there was an indecision, meaning both buyers and sellers were equally strong. Here, if you look at this candle, it says that both buyers and sellers were equally strong, but at the end of the day, sellers won the battle because the candle is red color, but then buyers put in a fight too. And the next day you see a candle closing above the red candle, saying that the sellers have entered the market, and the buyers failed to take the price down. See, the buyers and sellers fought for an entire day. This is a day chart. And the sellers had entire day to take the price down. But they were not able to do so. At the end of the day, buyers put in all their strength and closed the price up. And so they won the battle. And now it says that the strength of the sellers has decreased, and the buyers will take the price up. And so that is why we enter the trade here. Okay? Yes. So we want a small red candle and a big green candle. The green candle must engulf the red candle. We have to see if there is a support before here, and if we have a support, it really strengthens the pattern. We can wait for a price confirmation, which we have obtained here. If we wait for a price confirmation, the stop loss would be big, but sometimes you might not get an entry because the next candle would be red candle. Okay, so it is not necessary to wait for price confirmation. We can enter the trade at this level. All right. Yes. Now let me show you one more chart. This is once again of the same company. The price was moving up and down, the price came down here, and here we have a bullish engulfing pattern. Okay, we have a bullish engulfing pattern. This bullish engulfing pattern is appearing at a support level. So we had a support here. The price started moving up from this level. So we have a price support here. Okay. So this is good. The engulfing pattern is appearing at a support. And then we have a pattern which we had learnt before here. Correct? Now what does this signify? This says that the downtrend is about to end and the trend is about to change. So it can become either sideways or it can move up. So we have this candle too to say that the downtrend has ended. So I have this confirmation, I have this confirmation, I have this confirmation. So if I take a trade by placing a stop loss here, and if I wait for the target and take an entry, the stop loss would have hit. Okay, stop loss would have hit. So everything was fine here. Everything was fine. It was in a downtrend. It was at a support. I had this pattern before. Even then the trade failed and the stop loss was hit. And this is why placing the stop loss is very much important. Okay, the candlestick pattern says that the price may go up from here. It may go up. It doesn't say it will go up from here. It says it may go up from here. And here the prediction of the pattern has failed. Alright, and that is why a stop loss is crucial. And if you look here, this is also a bullish engulfing pattern, but this is in a sideways trend, and so it would not be considered. Alright, yes.